Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools are not, so let's get started. So this is another stock market weekly recap, guys. If you've been following us, welcome back. And if you're new, what we do is we look at the previous week in the stock market, look at some big news stories, see how individual stocks did, and we look at a couple mutual funds. And this is for the week of October 9th, and this is actually our 10th recap in this series, which is pretty awesome. We're going fairly strong with it. So for those of you who've been following, thank you so much. And at the end, I'll actually be going over the investments that we were looking at and see how we would have done 10 weeks ago. Hopefully you guys had a pretty good week. The stock market didn't do too shabby as well. So you could see with the Dow Jones, of course, 30 of the largest companies, they are up just around like 1/3%, but they are getting closer and closer, guys, to that 23,000 mark. It's getting nuts. And looking at the other index that we look at, the S&P 500, 500 of the largest companies in America, for this week they are just up 0.23%, so not a horrible week, but nothing too nuts. Now, there weren't too many crazy stories on Wall Street this week, guys. I know that Trump is looking at some tax reforms, as was last week, so I don't know if too much got done, but we're going to have to wait and see what happens with that. However, what is a hot topic on Wall Street right now and for kind of this year is actually Bitcoin. Bitcoin is like a virtual currency that I don't know if many people know what it is. People are saying it's part of the future, so instead of using like dollars, you use this virtual currency to actually purchase things. So it has been out since 2015, and I wanted to show you because it's hit all-time highs, over $5,000, what the currency is worth. Now, before we get into it, I want to show you my perspective on it. It is very, very risky. You cannot deny that fact. It is going up and just down all the time, so it's very volatile. I'm not getting into it. That's my personal opinion, but I'm neutral about it. You can make money with it. Obviously, people have. Some people say it's a bubble and it could crash at any moment. We're just going to have to see. So this is a chart of Bitcoin for the past week or 5 days. You could see earlier on in Monday it was like way below 5,000, and toward the end of the week it shot way past 5,000. Right now it's around $5,700. A couple other charts I wanted to show you is the past year. You could see they were way below the $2,000 mark. And you can see how drastic it could change. You know, it could shoot up and then it has those dips, but it has been continuing upward. And since 2015, when it went public and started actually existing, I suppose, but you could see recently it's just been doing disgusting. Of course, you could see those dips, but it's peaking and it's just ridiculous. Now, I'm not going to bash Bitcoin. I'm not going to support it. I'm kind of just seeing what happens. For this year, I think the return of Bitcoin has been, I think, way over like 800%. So the return has been phenomenal. I think in the short term, yeah, it can go up just because there's so much positivity. People are finally like not learning about it, but kind of just knowing about it. So as more people find out about this type of thing, more people invest in it, making the price go up. So that's why it's going up. So many people believe that this is the way of the future. So I do see in the short term that it will go higher. Now, I'm personally not investing in it just because it's so new and its future is kind of unknown. If you guys are investing in it, good for you. I'm hoping that it works out. But I personally wouldn't want to. The last thing I'm just going to state on Bitcoin is a quote from Warren Buffett, just because he's been investing forever, essentially. But you should be greedy when others are fearful, and fearful when others are greedy. So it seems like a lot of people are greedy at this moment. Is it a bubble? We'll just have to see. I'll leave it at that. Please just do your research before investing in anything, and just don't invest in something just because others are. That's my advice. So that's enough with that stuff. Let's get into individual stocks, starting with Apple, of course. They are slowly but surely rebounding since they released all their new products about, I don't know, maybe like a month ago. But they did close around $157. For this week, they are up 1 or just over 1%. Year to date, still up 35%. Now, I just wanted to show you guys this chart. This was from a month ago. You could see that it dropped fairly significantly, and it is slowly inching back up. For the 1 month, they're still down around 1.5%. But for the long term, just remember to hold on to it, and you won't lose anything because it is rebounding and will probably go higher. And next off is Disney. Getting slapped yet again, but they closed at $97.38. This week they are down again over 2.5%. Year to date, close to 6.5%. Now again, I want to reiterate why this is happening with Disney, because they own ESPN. That's actually, I believe I read it was around 40% of their revenue, which is obviously a huge chunk. And their subscribers of ESPN are declining, like, rapidly. So with these declining numbers, obviously there's no growth there, so investors are jumping out. For the long term, we'll just have to see what happens, of course. But there are other types of streaming services that other companies have. For example, there's Amazon, they have their thing, Netflix, they're streaming. So Disney, for their future, they are planning to get into streaming as well. They might have jumped onto the streaming boat a little bit too late, but they are jumping onto it. Especially with the mobile market, a bunch of people are streaming and looking at whatever on their phones. So they're thinking of next year, maybe even in 2 years, they were doing a streaming service with Disney movies and stuff like that, so they could definitely grow from there. So let's move into some tech stocks, guys. Starting off with Facebook, they closed at 173.74 for this week. They're up 0.88%, and year to date they are over 50%. And our next tech giant is Google. Now I'm going to be going over a bunch of tech stocks right now, guys, and then in like a minute or two I'll go over all of them at the same time. But for Google, they closed at 989 and some change. For the week, they are up over 1%. Year to date, 28%. And you could see on Wednesday, actually, real quick, they rose a decent amount of over 1.5%. That's because people were talking about their new product of Google Home Mini. It's a smart speaker, so that kind of boosted it a little bit. Now these next two stocks, we normally don't talk about them, but wanted to pop them up with. First, Netflix. This is a 1 month chart. They didn't close above 200, but they did break it for the first time ever. For this month, they are up very nice of over 8.5%. Year to date, over 60%. But what's going on for next week, they have earnings. So whether if they do good or bad, that could move up the stock very quickly or drop the stock very quickly. So we're going to have to see what happens with them. And of course, another tech stock, kind of the tech stock, is Amazon. They sell friggin' everything. So you can see, this is the 1 month chart. They are fairly stable. Well, not stable. They evened out for the month. You could see they dropped. They started at around $1,000, dropped all the way down to $940, and now they rebounded back up to $1,000. Year to date, 33%. But you can see if you hold on to a stock, that it can rebound. You won't lose anything as long as the company is good, stable, and growing. You won't lose anything. You'll regain it. Now, I wanted to bring up all of those companies at the same time, guys, because those are like the tech stocks that every single person or a lot of investors are looking at. They call, on Wall Street, they call them FANG, F-A-N-G, or also F-A-A-N-G for Facebook, Amazon. Sometimes they include Apple in there, Netflix, and Google. Now, why these guys are so popular is because they're like the big players in the industry right now. They're growing like crazy. They're kind of like, I was reading an article, they were kind of like the malls maybe like 5, 10, 20 years ago. Those were the things. So now everyone knows who they are. They're so popular. So everyone is flocking to them. That's why they're doing very well. Now, from those stocks, the FANG stocks, a bunch of them are in the mutual fund that we look at. So I'll actually show that next, which is Fidelity Contra Fund. For them, this is the year to date I wanted to show you. But for right now, they closed at just around $124. You could see their year to date has been very, very well. And you could see this because these are the holdings that they have. This is their top 10 holdings. They account for 36% of the fund. But you could see they have Facebook, Berkshire Hathaway, which is actually Warren Buffett's company. They're a holding company that has a bunch of different companies in that one. Amazon, Google, Apple, Microsoft, United Health Group, healthcare company, Visa, which is that credit card company, and Salesforce. So obviously you know most of them, they've been doing very well, which is why the mutual fund is doing very well. For year to date, they're definitely up over 20%. And the last quick stock that we usually look at is Starbucks. For this week, they closed at $55.72. Up 1%, so not too bad. And year to date, they're still fairly even, guys. Now, since this is the 10th episode of what we have with the weekly recap, I wanted to actually tell you guys if the stocks that we look at, if we invested them 10 weeks ago, like when we started this, what would you have grown until today? So let's go over the investments. What returns we would have had if we invested 10 weeks ago. So for Apple, if we invested 10 weeks ago, they would have returned a 0.38%. For Disney, they were down 9.5%. So they've been getting, like I said, slapped. For Facebook, they would be up 2.4%. Google, 6.6%. Very nice. Starbucks just up 0.5%, and the index, our S&P index, S&P 500 index, up 3%, and Fidelity Contra Fund, the mutual fund that I like to track, that I invest in as well, they're actually up 4.2%, higher than the index, which is pretty cool. And our small caps, I actually stopped looking at them weekly. But they are more risk, more return for the long term. Figure just to see how they do. But since 10 weeks ago, they are up 4%. So our best performers in those 10 weeks, guys, the best would be Google at 6.6%. And the worst is Disney, down 9.5%. Now, if you didn't know which one to choose in the beginning or wasn't interested in looking into stocks, if you went with the normal index, you would have returned to that 3%, which actually did better. Let me just double check. Yeah, it did better than every single stock that we looked at except for Google. So that 3% actually overperformed most of the things that we would have done individual stock-wise. That reason and that reason alone, which is why I would suggest, many professionals, including Warren Buffett, would suggest investing in a mutual fund for the long term because it mirrors the market. A lot of people try to beat the market and they simply can't. So if you can't beat them, mirror it. Mirror the market, guys. But with that mutual fund that I track and I personally invest in, it actually beat the market. Now, this is only 10 weeks. This isn't like, oh, this mutual fund's better than the market. That would have to be tracked years, decades to see if that's true. But for the Fidelity Contra Fund that we normally look at, it did beat the market by 1.2%. Real quick, guys, I was thinking maybe after every 5 videos, I was thinking of looking back at our initial investment to see how we would have returned since then. So I was thinking, like, in our recap 15, again, I'll go through all the stocks and mutual funds and what we would have returned. So we're still going strong, guys. Invest for the long term. If you have any questions, comments, concerns, leave them down below. I'd love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people do. Thank you so much for watching, guys, and I'll see you in the next one.